Goods and Services Tax (GST) in India. Goods and Services Tax (GST) is an indirect tax levied on the supply of goods and services. It is a comprehensive multi-stage destination-based tax that will be levied on every value addition right from the manufacturer to the consumer. It was introduced as the Constitution 101st Amendment Act 2017 following the passage of Constitution 122nd Amendment Act Bill. The GST is governed by a GST Council and its chairman is the Finance Minister of India. The proposal of a single common goods and services tax was made and given a go-ahead in 1999 during a meeting between then Prime Minister Atal Bihari Vajpayee and his Economic Advisory Panel, which included three former RBI governors I.G. Patel, Bimal Jalan and C. Rangarajan. Vajpayee set up a committee headed by then Finance Minister of Bengal Asim Dasgupta to design a GST model. In 2002, the Vajpayee government formed a task force under Vijay Kelkar to recommend tax reforms in India. In 2005, the Kelkar committee recommended rolling out GST as suggested by the 12th Finance Commission. After the fall of BJP-led NDA government in 2004, the work on the implementation of GST slowed down. However, the new Finance Minister P. Chidambaram of Congress-led UPA government proposed a GST rollout by 1st of April 2010 but failed to do so. In 2014, the BJP-led government was re-elected into power, this time under the leadership of Narendra Modi as Prime Minister. 7 months after the formation of Modi government, the new Finance Minister Arun Jaitley introduced the GST bill in the Lok Sabha, where the BJP had a majority. Finally, in August 2016, the amendment bill was passed. Over the next 15 to 20 days, 18 states ratified the GST bill and the President Pranab Mukherjee gave his assent to it. A 22-member select committee was formed to look into the proposed GST laws. State and Union Territory GST laws were passed by all the states and Union Territories of India, paving the way for a smooth rollout of the tax from 1st of July 2017. The Goods and Services Tax was launched at midnight on 1st of July 2017 by the President of India Pranab Mukherjee and Prime Minister of India Narendra Modi. The launch was marked by a historic midnight session of both the houses of the Parliament convened at the Central Hall of the Parliament of India. However, members of Congress and some other opposition parties boycotted the GST launch altogether, arguing that the GST would increase tax rates on a common person. The items which do not fall under the purview of GST in India as of now are alcohol for human consumption, petroleum products such as petroleum crude, motor spirit or petrol, high-speed diesel, natural gas and aviation turbine fuel, and electricity. The following taxes are being subsumed by the implementation of GST. The central level taxes such as central excise duty, additional excise duty, service tax, additional customs duty commonly known as countervailing duty, and special additional duty of customs. The state level taxes such as state value added tax or sale tax, entertainment tax, central sale tax collected by the states, octroi and entry tax, purchase tax, luxury tax and taxes on lottery, betting and gambling. Under GST, goods and services are taxed at different tax rates. These are 0%, 5%, 12%, 18% and 28%. There are three types of taxes applicable under GST: CGST, SGST, IGST. CGST is collected by the central government for an intra-state sale, for example, within Madhya Pradesh. SGST is collected by the state governments also for intra-state sales, for example, within Madhya Pradesh. IGST is collected by the central government for interstate sales, for example, from Madhya Pradesh to Kerala. Let's take an example to see what happens to the prices of the product and the taxes in pre-GST and GST scenario. If we talk about the pre-GST period, the cost of the product from manufacturer is 100 rupees. Say a tax of 10% is imposed on it, then the total cost is now 110. The warehouse adds label and repacks it at the price of 30 rupees. So now the cost is 140 rupees. 10% tax on it, which is 14. So the total cost is now 154. The retailer advertises at 50 rupees. So now the cost becomes 204 rupees. 10% tax on it, which is about 20.4, and the total cost is 224.4. So in all, the product which has a cost of 180 rupees and it becomes of rupees 224.4. Now let's discuss about GST regime. Now again, the product which has its original cost of rupees 100, say a tax of 10% is imposed on it, the actual liability is 10, so the total cost is now 110. Warehouse adds label and repacks it at rupees 30. Now a tax of 10% is imposed on it, which is rupees 13. The actual liability is now rupees 3 only, so the cost becomes 133. Again, retailer advertises at rupees 50, the cost becomes 180. 10% tax on it, say it is 18, and the actual liability is 5. So the total cost becomes 198. So the same item is having a cost of 198 rupees because the actual liability is only 18 rupees. In the case of goods and services tax, there is a way to claim credit for tax paid in acquiring input. What happens in GST is the individual who has paid a tax already can claim credit for this tax when he submits his taxes. In the end, every time an individual is able to claim input tax credit, the sale price is reduced and the cost price for the buyer is reduced because of a lower tax liability. The final value of product is therefore reduced from rupees 224.4 to rupees 198, thus reducing the tax burden on the final customer. The credits of input taxes paid at each stage will be available in the subsequent stage of value addition, which makes GST essentially a tax only on value addition at each stage. The final consumer will thus bear only the GST charged by the last dealer in the supply chain with set of benefits at all the previous stages. The GST law has replaced many indirect tax laws that previously existed in India. The taxation on tax is called the cascading effect of taxes. GST avoids this cascading effect as tax is calculated only on the value addition at each transfer of ownership. Reduction in transaction cost of doing business would eventually lead to an improved competitiveness for the trade and industry. GST will improve the collection of taxes as well as boost the development of Indian economy by removing the indirect tax barriers between states and integrating the country through uniform tax rate throughout the nation. The subsuming of major central and state taxes in GST, complete and comprehensive set of input goods and services, and phasing out of central sales tax would reduce the cost of locally manufactured goods and services. This will increase the competitiveness of Indian goods and services in the international market and give boost to Indian exports. The uniformity in tax rates and procedures across the country will also go a long way in reducing the compliance cost. Backed with a robust end-to-end IT system, GST would be simpler and easier to administer than all other indirect taxes of the center and state till now. GST is expected to decrease the cost of collection of tax revenues of the government and will thereof lead to higher revenue efficiency. Due to efficiency gains and prevention of leakages, the overall tax burden on most commodities will come down, which will ultimately benefit consumers. Thanks for watching. Please like, share and subscribe for more.